Hello, good afternoon and welcome to the marketplace. Coming up in the next 30 minutes, the Bank of Ghana mops up more than 60 billion cedis in excess liquidity since the beginning of this year to help reduce inflation, as Bank of Ghana Governor Johnson Isiama reveals high cost of maintaining price stability.
Has been immense. To give you an idea, almost stock currently is around 85 billion Ghana cedis. And out of that, the sterilization we have done this year alone accounts for about 65 billion. And so, yes, but there's a price to stabilization. There's a cost to stabilization.
Also coming up, United Bank for Africa promises to uphold highest form of compliance and governance as Bank of Ghana reinstates its trading license.
Is number one thing, compliance for UBA, complying to regulations, number one thing UBA. So we get over it. We do business, and they will be complying fully in all the geographies where we have presence.
Also in this bulletin, government misses Treasury bills target by a substantial 55%, the biggest so far this year, as interest rates rise. Big of this coming up in this bulletin. Now let's bring you an update on how the Ghana cedi is performing against major global currencies. My name is Winston Taki. Stay tuned. This is the marketplace. Now to our first business story. Executive Board of the IMF is expected to consider Ghana's staff level report on fifth program review in the first week of December. This is what Joy Business has picked up from persons with knowledge of Ghana's program in Washington, D.C., USA. George Wiafe has the rest of the story.
Reaching the staff level agreement with the government of Ghana when it comes to the fifth review of the International Monetary Fund program with the country is just one step of the entire process when it comes to passing this fifth review and getting that $380 million disbursed from the International Monetary Fund to hit the account of government of Ghana. This report has to go through several departments to scrutinize the country's assessment of how they fared when it comes to the fund program. Legal services, advice, the economy department, and then the final report is put together. Now, the staff would always want to ensure that whatever report that they put together about Ghana, when it goes to management, is not rejected. Now, one key thing that the staff is waiting for is a report about the arrears from the previous year when they had to do some audit. What will be the final position when it comes to the government of Ghana and how much was spent over the previous years on the several sectors of the economy? We understand that report should be ready this week. And the staff would take this report, add it to their total report or final report, and then submit it to the management of the International Monetary Fund. When they are also satisfied with this, they will look for a date that the board will meet on Ghana and submit this report. When the board meets in the first week of December, scrutinize this report, Ghana has passed it, then they will approve or recommend that some $380 million be disbursed to hit Bank of Ghana's account within that same week. But for a lot of people, it is not about the money, but rather the signal that it will send to donors and the investor community about Ghana's commitment to fiscal discipline and the fact that they are working very hard to ensure that they meet all the key targets as the country winds up to end the program in May 2026. Now, this would also force other donors to advance some fresh capital of funding to Ghana that should come from the World Bank and other donors, as well as the investor community. Don't forget that you will also see these rating agencies also respond to this with respect to what has happened when it comes to the fifth review. All these things could go along with to fast track the recovery of Ghana's economy. Well, for some of us who were here for the annual meetings covering with Joy News and Joy FM, it's about how interesting this annual meetings has been in terms of all the gatherings, the meetings, and relaying it back to our guys in Ghana. For the Managing Director of the International Monetary Fund, Kristalina Gogieva, Ghana must do more in the area of revenue mobilization to help withstand the global shocks.
Global growth has held fairly steady and is projected to slow from 3.3% last year to 3.2% this year and 3.1% in 2026. That's better than we feared, better than we projected 6 months ago. Many countries, especially emerging markets, we have a chapter on emerging markets policy fundamentals, have pursued sound policies. They have strengthened their institutions. They have strengthened their frameworks. This investment is paying off, and if I may say, stay the course.
She also believes that equipping the private sector could be one of the surest ways in helping deal with the current uncertainties when it comes to the global economy.
We know private sector handles uncertainty better, so unlock private sector growth for economies to deliver more jobs and better livelihoods. For the private sector to thrive, countries must push ahead with broad and ambitious domestic reforms. I have encouraged our members to embrace a regulatory house cleaning to help foster innovation and entrepreneurship. And I urge them to keep trade as an engine of growth. This can only be accomplished, though, when the basic building blocks of private enterprise are in place.
For the director of the fiscal department of the IMF doing one of those press conferences, he still thinks that Ghana has to do more in the area of checking its expenditure in these times, because that could go a long way to help us in achieving that much talked about fiscal discipline.
With respect to Ghana, I think there are two important lessons that we will learn. The first is strengthen revenue mobilization through improving tax administration to create resources for additional spending, including on priority spending, including health. And second, strengthen public financial management to avoid payment of arrears, to increase debt transparency, and to keep the fiscal house in order, as we usually say.
Well, from the headquarters of the International Monetary Fund, this has been our wrap and coverage of the annual meetings for our viewers in Ghana. And I know the debate will still go on in your homes and how we can better help the situation when it comes to stabilizing Ghana's economy. From the headquarters of the International Monetary Fund here in Washington, D.C., USA, this is George Jaffe reporting for Joy Business.
Still from the IMF, the Bank of Ghana has been able to mop up more than 60 billion cedis in excess liquidity since the beginning of this year. This is part of the central bank's mandate to use its open market operations to maintain price stability and keep inflation at very low levels. Speaking at the Governor Talks program in Washington, D.C., USA, Dr. Johnson Isiama noted that this is coming at the great cost to the Bank of Ghana in terms of interest payments.
When we came in, we saw that we had to do a number of things. Even the entire monetary policy framework needed to be upgraded. We needed to strengthen the credibility of the central bank. there was a lot of liquidity, that had built up, and so we needed to do lots of sterilization. We also needed the complementary, efforts from the fiscal authorities, and so we had to engage the fiscal authorities at the same time. And then you also needed to look at food prices. So it was a complementary effort across all fronts that has helped to, deliver the disinflation we are looking at. But we give a lot of credit to the tight monetary policy stance we have preserved. Currently, even though we are easing, we are still holding that anchor very strong.
Now let's come back to Ghana. The government missed its Treasury bills target by a significant margin, that is 55%. The biggest undersubscription recorded so far this year. It posted a 23% oversubscription of the short-term instrument the previous week. Interest rate also shot up across the yield curve. There was more in this Business Desk report.
According to the trading results by the Bank of Ghana, the government got 2.92 billion Ghana cedis of the short-term instrument as against the target of 6.57 billion Ghana cedis. It, however, accepted 2.08 billion Ghana cedis of the total bid. A little over 71.2% of the bid came from the 91-day bill, compared with 83% the preceding week. About 2.085 billion Ghana cedis of the bid were tendered. The uptake was 2.080 billion Ghana cedis. For the 182-day bill, 704.6 million Ghana cedis of the bids were tendered. The bids accepted were estimated to the tune of 699 million Ghana cedis. Also, 136.5 million Ghana cedis of the bids were tendered for the 364-day bill. About 110 million Ghana cedis of the bids were accepted. Meanwhile, the yield on the 91-day bill increased by 16 basis points to 10.69%. That of the 182-day bill also shot up to 12.43% from 12.30% the preceding week. The yield on the 364-day bill rose by 5 basis points to 12.92%.
Joining us on Zoom is Nelson Kwagbeji, the head of finance at Melbourne Capital. Now, let's start from the Bank of Ghana. Welcome to the marketplace, Nelson. Now, mopping up over 60 billion cedis in excess liquidity is significant. How does this move impact inflation and credit availability in the economy?
Well, thank you very much. Good afternoon once again for having me. Well, I've always been saying that the primary role of the Bank of Ghana is to maintain price stability. When we started the year, inflation as at the end of December 2024 was 23.8%. The economy then was overheated, and so it was just prudent for Bank of Ghana to step in through their Bank of Ghana bills to absorb excess liquidity from the system, and that has actually helped in the disinflationary pressure. And I have always been saying that the disinflation pressure that we are witnessing is largely attributable to the intervention that the Bank of Ghana has done since the beginning of the year. In terms of credit availability, once Bank of Ghana is absorbing excess liquidity from the system through their Bank of Ghana bills, which is normally higher than Treasury bills, you expect the private sector to be starved of the needed credit because the banks will be going there to buy the Bank of Ghana bills, and other, institutional investors will also be going there to buy it. And so, to the extent that inflation was high, it was only prudent for Bank of Ghana to sterilize the economy by absorbing excess liquidity in order to tame down on inflation. And that objective has been achieved,
Great.
Considering the fact that as of September, inflation, moderated to single digits.
Great. The Bank of Ghana also says these operations come at a huge cost in interest payments. How sustainable is this approach in the medium term?
Well, I think that it would depend on the frequency. Now, inflation is a single digit, and so we don't expect Bank of Ghana to be intervening more often in the market by way of selling the Bank of Ghana bills. And by doing that, what it also means is that Bank of Ghana will not be paying so much interest on its bills. So in the medium term, I think that now inflation is within the Bank of Ghana target of 8% plus or minus 2, and so we expect their frequency to reduce. And once their frequency reduces, we also expect the interest payment that they'll be making on the bills to also reduce.
Now, with government missing its T-bill target by 55%, What does that tell us about investor appetite and confidence in short-term government securities?
Well, it has always been either under subscription this week and the next week over subscription. But generally, investors are more interested in the yields. And once the yields are very low, you expect them to be moving away gradually from the Treasury bill market to other, investment vehicles. And so to the extent that the rates are low, investors will sort of move away gradually. But don't forget that inflation is at 9.4%, single digit. And so even the 10.70% for the 91-day Treasury bill is higher than inflation. And so we will continue to have this mixed reaction and mixed sentiment from investors regarding the Treasury operations of the government. However, we expect that getting to the end of the year, most of the institutional investors will bounce back, and that the under-subscription that government is currently registering will be turned into over-subscriptions.
Nelson, thank you for your time here on the marketplace. Nelson Kwaguji is the head of finance at Maybank Capital, giving us updates on how the impact of the central bank's bumping or less intervention on the market will affect the whole structure of the CD, basically going forward. We'll bring you update on the four prices right after this break. Stay tuned. Welcome back to the marketplace. My name is Winston Taken. Now to more business updates. Fuel prices are dropping at the pumps this week, led by market leader Star Oil, which is now selling a liter of petrol at 12 cedis 77 pesos, down from 13 cedis 17 pesos. Diesel has been reduced to 12 cedis 97 pesos. There is more in this report. Market leader Star Oil is this morning selling a liter of petrol at 12 cedis 77 pesos from the old price of 13 cedis 17 pesos per liter. That of diesel has been reduced from 13 cedis 45 pesos per liter to 12 cedis 97 pesos. Second major player Guel has also reduced prices at the pumps. Petrol is going for 12 cedis 98 pesos, while diesel is selling at 13 cedis 85 pesos. More of the oil marketing companies have told Joy Business that they will move to reduce their prices this week. The reduction for this pricing window has been influenced by cedi's appreciation and declining prices of finished petroleum and that of crude oil. The move, according to the Chamber of Petroleum Consumers, could go a long way to force transport operators to back down on their push for increase in fares. Now, the Chamber of Agribusiness is advocating the establishment of a strategic marketing framework to boost the competitiveness of the local rice sector. Speaking in an interview with Joy Business, Chief Executive Officer Anthony Morrison emphasized that the quality of locally produced rice has significantly improved and now compares favorably in case of surpasses that of imported ones.
Of the marketing board, I think that we can take a good look at it. The issue with rice in Ghana is about how we develop a competitive marketing strategy for our local rice. Our local rice are more nutritious. They come on board with more nutrients than the foreign ones. They are more fresher, and they are 6 months older in some cases compared to 5 years, 10 years of the imported rice. They also come as people of Ghanaian descent who have invested into it. So you have to consume and build your country. So we need to look at it. And also, people talk about the perfume rice. The local rice have more perfume than the foreign rice. And people ought to be educated, okay? The consuming public will have to be educated. And I think that when we undertake a very aggressive marketing strategy to develop some competitive strategies in place, we will be able to attract a lot of consumers. The issues about stones and other things, these were created by the importers. Trust me, we have very high top processing and milling factories in the country who are processing top grade rice in the market, and we are also exporting some of our rice to the US. Okay, so if US is consuming what we are producing locally, why are we complaining?
That's all for business here on the marketplace. Thank you for watching. My name is Winston Taki. Have a good business week starting today. Bye-bye.